Welcome back to Explain the Charts. Today is February 13th, 2025, and we're diving deep into the GBPUSD market. Recent headlines indicate a mixed sentiment surrounding the GBPUSD, with some sources pointing to potential upward momentum based on positive UK GDP figures. However, persistent inflation in the US might temper this bullish outlook. Let's start by examining the daily chart to gain a broader perspective on the long-term trends. The daily chart showcases a clear upward trend over the past few months, with GBPUSD gradually breaking above resistance levels. We can identify potential support levels around 1.24 and 1.22, while resistance seems to be around 1.27 and potentially 1.29. Notable price movements such as the spike in mid-February 2025 highlight the volatility associated with this pair. Now, let's zoom into the one-hour chart to better understand recent price fluctuations and identify shorter-term patterns. The one-hour chart reveals more recent price action, showing fluctuations that are consistent with the daily chart's overall trend. We can identify several instances where the price bounced off the 1.24 support level, demonstrating its significance. Short-term traders may find opportunities in these minor price swings, utilizing technical indicators to time their entries and exits. Moving to the 15-minute chart will allow us to inspect the most recent price action and possible short-term trade opportunities. The 15-minute chart provides a granular view of recent price action, enabling the identification of very short-term support and resistance levels. Scalpers, for instance, could exploit these minor price changes for quick profits. Observe the wick formation on several of the candles. This might suggest indecision among traders and potential reversals. We will now go back to the one-hour chart to show a specific time range to further enhance our analysis. Focusing on this specific range, we notice a period of consolidation followed by a sharp upward movement. This could be interpreted as a breakout from a short-term trading range. The combination of the daily and one-hour charts confirms the possibility of a bullish continuation, pending confirmation on the 15-minute chart. Returning to the daily chart, we once again note the potential support at 1.24 and resistance at 1.27. However, these levels are dynamic and could shift based on market sentiment and news. In the short term, we see potential for a further rise towards 1.26, depending on whether the upward momentum from the one-hour chart sustains. A sustained breakout above 1.27 could signal a move towards 1.29 in the medium to long term. Conversely, a break below 1.24 could trigger a bearish trend. Keep an eye on upcoming economic releases, central bank announcements, and geopolitical factors that might heavily influence the price. The 15-minute chart is essential for scalpers, but it's crucial to remember that the daily and one-hour charts give you the bigger picture. Using these charts in conjunction will give you the most comprehensive and helpful information when deciding when and what price to trade.